Historically, the outcome of a U.S. presidential election has mattered to the performance of emerging market equities and bonds. We looked at the last 8 cycles of elections and identified 3 channels of influence through which the U.S. elections influence emerging markets. Why does that matter? Stay with us as we break it all down right here on UBS Trending. Hi everyone and welcome to UBS Trending. I'm your host for today, Amantia Muhedini, filling in for Anthony. Alejo Cervonco is here from the emerging markets team to share some insight on the impact of this year's US presidential election. Now Alejo, you and I sit in New York. We spend a lot of time thinking about this election. It's a big topic of conversation, but why does this matter for emerging markets?
It matters, Amantia, because we're talking about an election taking place in the largest economy in the world, one with the deepest capital markets out there, with the undisputed today global reserve currency and the most sizable spending in military anywhere in the world. So all of our clients in the emerging markets are looking at this super closely, and policymakers know that it moves the needle as well.
That's right. I mean, it's impossible to ignore, even if you wanted to, and you ought to not ignore it. So I know your team did some interesting research here on the historical performance of EM assets tied to elections. Tell us a little more about what you found.
That's right. Let's start by recognizing that we only have good quality data for the last 8 U.S. presidential elections in terms of emerging market return information, right?
So relatively small data set that we should keep in mind here.
That is correct. Now, the one conclusion that we can reach is that U.S. election season brings about volatility. There's quite a bit of movement in the price of emerging market stocks and emerging market bonds around election date. I'm talking about maybe 3 months before and 3 months after. In addition, when you look at the outcome of the election, emerging market assets, stocks and bonds tend to do a little bit better when you have an outcome of a unified U.S. government, that is a red sweep or a blue sweep, rather than an outcome of a divided U.S. government. This has to do with the reality that maybe united government situations allow U.S. to do more policy making and have a bigger impact.
That's right. So there's less uncertainty there from those who watch the government in terms of what will happen. That makes sense. And we just saw the slide. What are we looking at here, really?
Again, 8 observations is really not a lot from a statistical perspective. And in addition, this V-shaped form is an average. And this, in a way, masks differences below the hood. There's some cases that do not necessarily look like that.
Yeah, that makes sense. And of course, past performance does not determine future returns, as we always say. But your point on the importance of a unified government is actually perhaps a more forward-looking one. So tell us, looking forward, what are some of the paths of influence that we should be paying attention here?
When you think about what will happen if Trump wins or if Biden wins and its impact on the global economy and emerging markets, I think you got to look at 3 main channels of impact. Number one, how will the U.S. economy evolve from a growth, inflation, interest rates perspective? Number 2, how will trade policy take shape? U.S. presidents have a lot of influence over bilateral relationships in terms of trade with the rest of the world. And as you know, Amantia, tariffs as a policy tool have become more common in recent years. Third and last, geopolitics. I'm thinking about the U.S. relationship with China, with India, with Mexico, with Venezuela, with the Middle East at large. The way Trump might approach this, it might be very different from the way Biden might, right? We're talking about maybe a worldview of unilateral action versus a worldview of multilateral action.
Yeah, interesting. And now reminding ourselves that we are 9 months or 8 months from the election, what are our early views here on either candidate and the influence?
As you highlight, a lot can change based on stated policy views, based on tax policy, regulatory policy. We think it's more likely that we'll see maybe a higher growth and higher inflation backdrop under Trump, which might be a little better for emerging market assets, even if it comes at the cost of higher interest rate in terms of financing costs. That said, we do need to recognize that when looking at trade policy, geopolitics, Trump might bring along lower predictability.
Sure, more volatility, perhaps.
Yeah. Exactly. So it's hard to come out with a single conclusion for every emerging market out there.
That's right. So then maybe let's pick a couple of the largest ones. Obviously, China comes to mind. What's our view there on what to expect?
Our view is that U.S.-China relations are likely to remain challenged, irrespective of who wins the U.S. presidential election. When thinking about U.S. export controls in the technology space, these are more likely to become more aggressive than to be pared down. And maybe this is a good opportunity to think about diversification of technological exposure globally, not only in the US and China, but maybe taking into account emerging market locations such as Korea and Taiwan that are home to world champions when it comes to the memory space or the chip making space.
Yeah, so potential beneficiaries as well. And maybe some final thoughts, Leo, on other parts of the world, in Latin America, perhaps.
I'd say Mexico, of course. It's going to be at the eye of the storm in terms of the electoral rhetoric in the US. This might induce some volatility on Mexican assets, but we think Mexico has strong enough fundamentals to allow the country and its assets to weather this electoral season. Other countries that are very important to monitor are Brazil and India. These are, in a way, becoming modern geopolitical middle powers that have the ability to try to remain neutral and craft their own path, even if the US and China don't get along very well. And this drives benefit to both their economies and assets.
Got it. So very interesting. I mean, lots to watch here. Thank you for spending this time with me. And there's more of this research in the Emerging Markets Monthly Report and in our Election Watch report from CIO. And thank you to our audience for joining us in this conversation. For more, please visit ubs.com/views. And of course, UBS Trending is on social media. So follow us on Instagram at UBS Trending for content that you won't find anywhere else. And you can also check out LinkedIn, Facebook, and Twitter for more. And as always, if you have any questions about your portfolio, please speak with an advisor. Until next time, I'm Amantia Muhedini, filling in for Anthony. Have a great day, and remember to keep your eyes on what's trending.